Hello guys, I'm Devang from Equialpha.com. 14,000 branches, 2,57,000 employees and around 21,000 ATM. Yes, I'm talking about State Bank of India, which is India's largest bank with over 30 lakh crore deposit base and 20 lakh crore loan outstanding. Big numbers, right? Before starting about State Bank of India, I have a picture for you to show. Yes, this is true. This is not an editing photo. This is for real. That's a pic of a woman working in one of the branches of State Bank of India. What do you think in the longer term a share price movement depends upon? Is it the market share of the company? Is it how the company big is? Or it depends upon the sales? To be more specific, it depends upon the profit growth. A share price of a company is directly proportional to the profit growth. Well, this is not my opinion. I have some facts for you to show. These are the top 10 wealth builders of 2013 to 2018. Look at it. Maruti Suzuki, profit after tax growth of 25% for these 5 years. HDFC Bank, profit growth of 22% for these 5 years. Consistent profit growth. And the end result is that you can see the share price movement for those years. Making sense? Overall, these top companies, the profit grew around 19% per annum. Look at the share price now. It grew around 24% CAGR. That means 24% per annum. It's quite clear that in the longer term, how much consistently the company is growing its profit will be shown up in the share price itself. Now, let's have a look on the State Bank of India financials. So this is the last 10-year performance of State Bank of India. As you can see from here, that the State Bank of India's revenue grew by 250% in last 10 years. However, look at the profit. The profit degrew by 75% from 8,900 crore to 2,300 crore. That's a huge drop in profits. But will I say that State Bank of India is the biggest bank of India? Yes, it is biggest bank, but it's not a good performer. It doesn't generate good amount of money. We'll answer to that question at the end. What's my conclusion regarding State Bank of India. Let us understand why State Bank of India never performed. State Bank of India, being a government bank, sometimes have to take care of economy more than their shareholders, more than their stakeholders, more than their investors. Why? Because someone has to come up when the economy is in danger. Look upon this picture. State Bank of India don't want to lend to these sectors because they know that lending to these sectors is not a profitable thing to do, but they are forced to do so by the government. So I'm not blaming that the government is wrong in this case, but understand it's something forceful and something they already know that it will be bad. So lending to infrastructure sectors, power sectors, these all have created huge amount of non-performing assets for them in the past. And I believe this will happen in future because nobody in India is of that size to come up when the economy is struggling. Who will come? Only government can come up at that point of time. And SBI would be the biggest weapon of all time. So someone has to work for economy more than the profits. And that's what they are doing. The focus is on these sectors which have never generated good money, which have always created bad dates for them. Second point is lack of efficiency. Well, we have seen in the photo in the starting, it clearly depicts that the employees are not that efficient. But you might be thinking that that can be a one-off case. Well, I agree to that. That's why I have some additional data to support my argument. If you look upon the employee cost as a percentage of top line for all the private players and State Bank of India, you will find something more interesting. Look at HDFC Bank employee cost as a percentage of sales. It's around 10%. Now look upon Bandhan Bank employee cost as a percentage of sales. You will find that around 12%. Look at ICICI Bank, 13%. IndusInd Bank, it's just 7% employee cost as a percentage of sales. Now look upon State Bank of India. the employee cost as a percentage of sales is around 19%. That's a huge gap in the employee expenditure when you compare these private banks with the State Bank of India. Doesn't this depicting that there is a lack of efficiency in State Bank of India? Third point and the most important point is value migration. Due to this lack of efficiency, people started moving from these public sector banks to the private sector banks. Well, if you look in the year 2010-11, the total deposits which were raised in that year by private sector banks was 1.7 trillion. For the public sector banks during the same period, it was 6.4 trillion rupees. So public sector was around 6 times size in terms of deposit compared to the private peers. However, if you look in 2018-19, this scenario has been completely changed. The private banks now have 7.1 trillion rupees of deposits raised in that year. So from 1.7 trillion rupees in 2010-11, it's now at 7.1 trillion rupees. If you look upon the public side, in 2010-11, the deposit raised was 6.4 trillion rupees, which in 2018-19 is just 2.7 trillion rupees. This clearly shows that the deposit base have been hugely shifted from these public sector banks to the private sector banks. Now look at the loans given by them in 2010-11. Private sector banks gave 1.4 trillion rupees. Public sector gave 5.4 trillion rupees. However, again in 2018-19 the scenario is completely opposite. The private banks from 1.4 trillion is now given 7.3 trillion. The public banks from 5.4 trillion is now 2.3 trillion. That indicates that slowly people for their loan requirement for making deposit have shifted from public sector banks to private sector banks. Big shift, right? Now let's talk about the price returns. In 2010, State Bank of India was priced around 230 rupees. Currently, as I speak today, the price is around 322 rupees only. That's just 40% in a span of 10 years. Even an FD can give more than that. Now, look upon the chart of Kotak Mahindra Bank. In 2010, the share price was around 205 rupees, which today stands somewhere around 1680 rupees. That's around 723% upside from 2010 to 2020. Look at the price of HDFC Bank. HDFC Bank in 2010 was around 160 rupees, which is today 1242 rupees. That's 676%. All these figures have been adjusted by split, bonus, whatever the case is. Due to all these factors regarding the value migration that has been going on since last 10 years, due to lending to the sector from where you know that money won't be able to come back, or it might come with a haircut, or it might be delayed, to the inefficiency of the system. So here's my conclusion on State Bank of India. No matter how much promising the India story looks upon, no matter that banking is still underpenetrated, I would never buy State Bank of India because of the factors that I listed above. Now it's your choice to take an informed decision or to just follow the sentiments or to just follow the herd. If you like the content, then just hit the subscribe button and the bell icon right now so that more facts keep on coming to you. Winning is a choice. Thank you for watching. Devang Maheshwari.